Hi everyone, welcome to Surer Gains channel. Please subscribe, like and comment if you like the content. Thank you so much. So let's begin. Today we are going to discuss index funds versus index ETFs. Nowadays in India, passive investing is becoming increasingly popular. Passive investing can be in the form of investment in index funds and in ETFs, that is, exchange traded funds such as Nifty 50 ETF and Sensex ETF. In this video, we will discuss pros and cons of index funds and ETFs. Let's begin with low cost funds. Compared to actively managed funds, both index funds as well as ETFs of indices are low cost funds. Let's take a look at intraday movements in index. Index funds can be purchased and redeemed from asset management companies, that is AMCs, at the net asset value, that is NAV, of a particular date only. This ignores the intraday movements in the value of index on a particular day. Unlike this, an ETF unit can be purchased or sold at the value of the index prevailing at the time of transaction on a real-time basis. Thus, in case of an ETF, one can take advantage of fluctuations in the value of index during the day. This cannot be done when an investor invests in an index fund. Let's take a look at the problem of illiquidity. When an investor in an index fund wants to redeem the units, AMC is obliged to redeem all the units within the time frame prescribed by SEBI. Thus, there is no problem of low liquidity of the units when an investor wants to redeem. On the other hand, in case of an ETF, if an investor wants to sell holdings, sometimes one may have to wait for some time for execution of the transaction. If the ETF is of a frontline index like Nifty 50 or Sensex 30, usually this problem of illiquidity is not faced. But for ETFs of other indices, sometimes one may face the problem of lower liquidity. So, when to buy index fund and when ETF? Well, in view of the points discussed earlier in the video, it may be said that if an investor wants to take advantage of intraday movements of index, investment in ETFs may be better. If this is not intended, one should invest in index funds to avoid the problem of occasional illiquidity in ETFs of indices which are not frontline indices. Thank you so much for watching the video, but in the end, let me add a disclaimer. Please do your own analysis before investing. This video is for educational and information purpose only. And if you like the content, please subscribe to our channel and support us. Thanks again.